Hey everybody, good afternoon, wherever it is that you are tuning in from today. My name is Ali and I work at iSentia. I'm the CX director here and I'm really stoked to invite you, have you here, welcome you to one of our iSentia Conversations webinars. And I'm just going to do a little bit of housekeeping at the top. For everybody who has tuned in today, we're really delighted to have you here. We can't wait to hear from you during this session, but we have muted your microphones. So that's just so that we don't pick up any background noise, anything funky you've got going on in your Tuesday afternoon. So the best way to get in touch with everybody in the session today is via the chat or the questions area, which is on the right-hand side panel of where you're tuning in. And definitely leave any questions in there for us. We've got time for audience questions at the end of the session today. And we've also got Josh on hand to give you a hand if you are experiencing any technical difficulties. He'll be able to troubleshoot those to the best of his abilities. All right, I think that is housekeeping out of the way. I think that means that we can get into the meat of our session today. So we are talking about finance disrupted. We're going to be discussing apps, social media, the people power that sits behind the democratization of finance. So let me introduce you to the faces that you can already see, the panelists that I've got joining me today. We've got Gus Watson, who is the head of investments at Sharesies, and Gus sent me over his bio, and he's done quite a couple of things before he joined Sharesies. So studied as a mechatronics engineer, strategy at Meridian Energy, pivoting to investor relations at Contact Energy after becoming a chartered financial analyst. That's some experience you're bringing to us today. And yeah, there's some pivoting in there before pivoting was even a thing, I think. And so at Sharesies, you're head of investment, so that means that your role is to seek out new investment opportunities. You've got over 300,000 customers, investment opportunities for those people. But I'm also really interested in the part of your role that is about ensuring your customers feel informed and confident when they're making those investment decisions. So good afternoon, really stoked to have you on the panel today, and we'll come back to that in a moment. Awesome. We've also got Andrew Ledovsky. So Andrew is an insight specialist at iSentia. And as an experienced media analyst, Andrew works with our clients understanding risks and opportunities that happen in the media cycle. And to this session today, Andrew is bringing his experience as an economic analyst and his passion for media and the impact that it has on business and the role on culture and decision making. And rounding out our panel today, we have got Brett Joffe from Flux, a co-founder of Flux. And I'm going to ask Brett a little bit more about Flux in a second. But Flux is a tech startup which is making financial literacy and business concepts not just interesting, but fun for young Australians. And Brett co-hosts the daily podcast, What the Flux. And I was just saying to Brett just before this, what a really good friend of mine listens to What the Flux, and he goes to a lot of client meetings, networks a lot, and he said, this podcast is my secret. It means I don't have to read the boring bits of the newspaper. I just listen to this podcast. And in Brett's bio, it says that, like his childhood hero, Banana Man, Brett loves to blend education with fun, and that he's really fascinated by the intersection between finance, entertainment, and technology. So I wanted to start with you, Brett. Tell us more about what it is that you do at Flux. What is that sweet spot in the intersection between finance and entertainment and tech?
Thank you for that very generous introduction, Ali. Very kind of you. I'm very excited to be here. So yes, I'd love to tell you a little bit more about Flux. I guess it begins with the fact that 3 in 4 young Australians, and I'm sure the numbers are similar in New Zealand as well, 3 in 4 young Australians struggle with basic financial literacy. And when we say basic financial literacy, we're talking saving, credit, investing, etc. And the reason that we've found is that financial education is, 1, really overwhelming, and 2, it can be really, really dry. And at least from my personal perspective, it certainly wasn't taught in school. So, how do we know that? Well, basically, we launched our business at the beginning of last year, a very interesting year to launch a business. And over that time, we've built a community of over 100,000 young Australians. And we've come to get to know this Flux family, as we call it, really well. And what we've come to learn is that the most effective way to get young people to engage with money is to make it fun and accessible. So we've created an app that includes things like prize-linked savings games where you have the chance to win when you save money. We've got videos, we've got daily podcasts, and ultimately our aim is to make financial education and personal finance as entertaining as it can be. So that's a bit of a background on us. In terms of your question around that unique intersection between finance, entertainment, and technology, what excites us is that that's a really new space that I think a lot of people are not yet thinking about, but something that we're really focused on. And let's say in the next 3, 5, 10 years, it's going to be a really central plank when it comes to helping young people improve their financial literacy. So from our perspective, we're a tech company first, but we're really focused on making financial education accessible and fun, and doing it in a highly entertaining way. And I'm sure throughout the conversation, I'll be able to elaborate a little more.
That sounds awesome. And entertaining is one thing, and I think that it's that entertainment that makes things accessible, right? And Gus, when I've been reading about Sharesies and hearing about people who are able to say, yep, I've gotten into stocks now, and it's all because they're using Sharesies, accessibility seems to be a big thing. Are you able to run us through Sharesies and how you make investing accessible to everybody, not just people with loads of money or access to brokers?
Absolutely. It was great to hear from you about that, Brett, because we're seeing exactly the same thing, that intersection between fun and investing. And I think you can see behind me, our colour as a platform was pink. We like to be a little bit different, a little bit fun. We talk about fruit and to relate to the fun side of investing. So yeah, Shares is a wealth development platform. Was founded 4 years ago. The purpose is to create the most financially empowered generation. And the vision behind that is the same investment opportunities for someone with $5 as someone with $500,000 have. So 4 years ago, when our founders started the company, they realized that investors were priced out, jargoned out, and left out. So priced out, brokerage fees high, management fees were high, jargoned out, complexity with all the investment information out there, and left out, the financial systems just weren't set up for our target audience. So how have we gone about solving that problem? Well, one of the things to provide access, we provide all our investments at 1 cent, fractionalized down to 1 cent, which means that an investor can put in $2 every week and slowly build their wealth in that way. So accessibility in terms of price, we've got accessibility in de-jargonizing all our content, and also we take care of the admin piece like tax, for example. So now as a company, we've got 340,000 customers here in New Zealand, about $1.2 billion under investment, meaning about $3,500 in a portfolio. So generally we have the small end of the portfolio, but we have the range between very small and very large. But yeah, so that's a bit about Sharesies.
Thank you so much for sharing about Sharesies. I'm sure someone's made that joke to you every day since you started the business.
Yeah.
What I'm hearing from both of you, Brett and Gus, is they're relatively new businesses. They're new platforms. You've got big visions. We're focusing today on disruption, and I wanted to get both of your thoughts. I'll throw to you first, Gus, and then you, Brett. Do you think we are seeing disruption in the finance sector? Are we seeing a tangible power shift? Is there more power in the hands of everyday people? Or are we still talking about an industry that is largely inaccessible to the everyday person?
I think we're seeing an industry which is still largely inaccessible, however, there's increasing accessibility. And I think it's talking to those points about being priced out, jargoned out, and left out. And the priced out piece, there's competitions in the space. We're seeing more and more platforms and opportunities to get involved. On the jargon out piece, we've got pieces like Brett and Flux, who are offering more channels for information in cool ways. And it's something we care about a lot at Sharesies at the moment, because we have opened up a lot of access. We're looking to do more of the information piece. And on the left out piece, like, are our systems set up to deal with retail clients generally? I think the incumbent structures are being tested, and we're going to talk about GameStop soon and how we have to think about their financial systems going forward to solve that piece there. So yeah, to answer your question, increasingly accessible, but still inaccessible for a lot of people.
What
And
do
a
you
lot of
reckon,
that sits
Brett?
on the confidence side, really.
Look, I think right now, for anyone who's got their eye on the finance world and what's evolving, there's never been a more interesting time to just be observing the kind of trends and themes that are emerging. For instance, investments in kind of non-traditional corners of the finance industry all seem to be, booming right now. If you think about crypto, or even what's hot really like right now, like non-fungible tokens, for those who are familiar with what I'm talking about, or the kind of institutional investment side, things that like SPACs, which people might mean nothing to anyone, that's very jargony, but basically there are little pockets of finance that are becoming extremely popular and accessible, largely for the first time. And the way in which everyday retail investors can access these things is happening for the first time too, which makes things interesting. And what it also makes it interesting is that it's very appealing to a generation that doesn't have the patience or interest or willingness to get into the long-term things like bonds or equities or anything like that. So is this a fundamental long-term power shift? As you ask, Ali, it's hard to know. It's probably too early to know, but there are some pretty crazy things going on right now. And something I personally think about quite a bit is, if this is a long-term shift, then how long does it take for really professional, sophisticated investors to work out how to take advantage of it so that they can win in the market against, the everyday retail investors that seem to have a lot of the power and communication capability that maybe the traditional players don't have?
Awesome. So Gus has already brought up GameStop, and I probably could have set a timer for how long it would take in our democratization of finance webinar for GameStop to come up, and we're going to talk about it in a second. But before we moved on, something that I've been thinking about is that disruption that we are seeing, do we think it's being driven by people power? Is it being driven by social media users? Is it being driven by everyday people? Or is it being driven largely by fintech? So before we talk about GameStop, I just wanted to ask you for any thoughts you've got on that, or if there's an example of disruption in this space that really excites you that you'd like to share. So I'll throw to you first on that one, Gus.
First, I think that social media and the fintech are the enablers for the people, rather than one or the other. So we've got a couple of things happening at the same time, but really enablers, and it's really given voice to lots of people rather than certain institutions, if you like. So something that really excites me about this disruption is how many more people are now getting engaged in the investing space, and in the financial sector and the world around them. And I think we see this every day, like the low barriers to entry, coupled with the increasing education available, has enabled people to learn by doing and share amongst the people in their communities that they deal with. So for me, like, we get a lot of customer feedback every day, and this is the cool feedback we get, is how people feel so much more engaged in the world around them. So if I'm going to say the fintech disruption that really excites me is the fact that you've got all these people which are really engaged in investing and growing their wealth going forward. I love that.
Awesome. Was there anything you wanted to add, Brett? What's exciting you at the moment in this space?
Yeah, I mean, I certainly would agree that consumer behaviours and preferences are always evolving, and I think last year we saw an acceleration of that for almost all industries, and I would include finance and fintech in that. I think it's not often largely because of something like one company necessarily, like a GameStop or a Robinhood or anything like that. It's largely a cohort of companies or industries that have gained an insight into a certain consumer and really enabled that, as Gus said. But I think there are a couple of examples that I can think of that are doing a fantastic job of leveraging the moment and these changes in consumer behavior. One in the States is called Public App, which is a great app. It basically lets you identify other people who are investing, and you can kind of follow them in a kind of Instagram-like way, follow their moves, replicate their moves if you want to. And why that's interesting is it's leveraging everyday people to improve its own product through the social aspect that human beings long for, and they're just applying it to the finance industry. And another example that I'm seeing that's really interesting with this major shift is how professional investors, to some extent, are starting to identify the trends around Bitcoin, and they're feeling their own kind of FOMO around needing to invest it kind of as a defensive strategy, which is not something that would have seemed reasonable 18 or 24 months ago. So it's kind of like the power of the people is to some extent influencing what the professionals are doing.
That's an awesome example. And so I do want to talk power of the people next. And Andrew, I know that as a researcher in this space, one of the case studies you've been looking at is GameStop. So I want to talk GameStop now, discuss whether we are looking at disruption, destruction, democratization. What are we looking at? Andrew, what does GameStop tell us about communication trends in this area? Could GameStop have happened without social media or Reddit?
I mean, we talk about, destruction, disruption, democratization. I mean, I feel GameStop is an expression. I mean, things that like what Gus is doing and Brett are doing are probably more steady development of that democratization of finance. But GameStop is absolutely an expression for a desire towards democratization. And I think that was probably the most interesting message, that democratization is always about disruption. Go back to the printing press or the novel. It might be happening more often, but it's not a new term. We often talk about it like it's a new term. What I find really interesting is that democratization message, and that that often that sort of democratization comes through innovation. And for finance, that catalyst might be social media. It might be increased tech. The ability to access these apps and these platforms that are developing. It might be alternative investment structures like cryptocurrency and NFTs. But definitely social media is so powerful in the ability for you to kind of coordinate, for you to share information, to get advice, to educate yourself quite quickly. And it enables things like GameStop, Wall Street Bets, as you said, it enables power of the people. It quickly allowed them to spot an opportunity, organize, pool their funds, and make a massive impact in an area that they probably weren't able to impact otherwise. What interests me and why I would say the focus from a narrative point of view probably should be on that democratization more than disruption or destruction when you're talking about GameStop, is because it is just a very powerful message. We do have this innate pull towards fairness. Anyone who's studied behavioral economics, for example, knows that's one of the favorite experiments is looking at how people react to perceptions of inequity. And when we've looked at narratives that kind of try to shift the conversation or shift the dynamics with things like high finance, with Wall Street, etc. Often it was focused on things like income inequality, which can be a murky message when you have, for example, is it more unfair that someone has and someone has not, or is it more unfair that someone has and I take it from them? But when you come to democratization, it's a very simple message. It's why am I not allowed to play the game? And Robinhood in particular, the actions that Robinhood undertook raised that to a pinnacle, that discussion of why am I not even allowed to play the game? Why am I not able to play under the same rules? Why can't I even be involved? And I think that's a clearer message and has much more potential to develop into a really meaningful narrative that changes the way that we talk about I guess, an industry that has a very problematic relationship, and I'll probably have a chance to talk about that a little bit more, but a very problematic relationship with the general everyday consumer.
Thank you so much for sharing your thoughts. And I want to get more GameStop thoughts across the panel. Brett, if I ask you this one first, and then Gus, feel free to jump in with any thoughts that you've got. Quick opinion on GameStop. Is GameStop something that we should be celebrating, or is it something that the industry should be moving really quickly to be regulating rather than celebrating?
Yeah, I think that's a really tough one to answer. I definitely think there are some components of it that are worth celebrating. But I also think that if it was to become a consistent thing, then regulation would be inevitable. And then it would become about how quickly can that regulation keep up with the change that we're seeing in the market. Traditionally, it's been pretty hard for regulators to keep up to speed with these sort of things, either be it a change in consumer behavior or technology, or both coming together as one, which is kind of what we're seeing here. You know, in any transaction, there's a winner and a loser. And in GameStop, it's been largely about celebrating the power of the people. Of course, on the other side of that trade are professional money managers who would be losing out, less media coverage for those types at this stage. But, you know, ultimately, I think there are components worth celebrating, but also regulation is likely if it continues to happen.
Is there anything you wanted to add around that, Gus? Are you celebrating, or are you joining team regulation when we think about GameStop, Robinhood?
Well, an interesting anecdote that I had, or an interesting observation that I had, was our platform had to, well, we were facing unprecedented interest. We were onboarding 3,000 people a day here in New Zealand, which was just this interest, which was driven by all this interest in the media, through Reddit, through our Facebook channels. So at our end, we were really trying to keep the systems open so people could keep buying and selling. And what ended up happening is our execution broker in the States couldn't meet their clearing collateral obligations, so we actually had to stop buying through our platform. And then, whereas we really wanted to keep it open, so we had massive pushback at that point. So something that we learned going through this piece was having real, we were front-footing and we're very transparent and clear with our communications about why we were doing things. And I think we saw some of the brokers around the world that weren't able to provide that transparency up front, and there was massive pushback because of that. So we weren't great, but that was something we have taken on board and we're looking to offer going forward. But yeah, so now we've got all these new investors that have come onto the platform, so it's really important to us to be able to educate them to make sure that they're good long-term wealth development, making long-term wealth development decisions, which a lot of them will be already, but it's just we're putting extra emphasis on these newly converted investors. So yeah,
that's fascinating. Even just hearing how that event has impacted your organization and what you've shared around transparency. Andrew, one of the areas that you spend a lot of time working on is best communications practice. And if regulation in this space were, it is inevitable, like Brett pointed out, what would your recommendation be to organizations who might find themselves needing to communicate around these types of regulations? What approach would you recommend?
I think it's going to be very difficult to sell if they're kind of communicating that this is regulation that's purely packaged and targeted towards stopping another GameStop. I mean, we did an analysis of the commentary, social media commentary around GameStop, and it's hard to find anyone who has any sympathy for what happened to the hedge funds or has any regrets about it happening or wouldn't like to see it happen again. I think we saw 88% was positive towards GameStop. Over 50% directly expressed the idea that they were beating the hedge funds at their own game, that they weren't doing anything more wrong than what hedge funds were already doing. And so if you're having a targeted regulation that's going to be trying to communicate one, I can't advise on regulation, but if you're trying to communicate a regulation that solely addresses the issue of what the GameStop Wall Street Bets did in terms of GameStop, it is going to be a really tough sell because it will fail that very basic equity kind of fairness test, because that's not the sentiment that's out there. Resoundingly, that's not the sentiment that's out there that unites, I mean, both sides of the political sphere. You had, Biden conspiracies and, calls for a socialist revolution. You had, Donald Trump Jr. and AOC and, Ted Cruz all getting together to kind of join in with GameStop. So I don't think that there's the support there if the regulation is solely targeted at GameStop. I don't know how that would play, and I don't know how you would sell it. Even just in the conversations, you just still have so much discussion about the lack of perceived lack of regulation following the GFC. There are still open wounds there. And if the outcome of GameStop is seen to be just another push to keep people out or to protect the finance industry, particularly investment banks and hedge funds, not so much commercial banks, it would be, I think it would be a tough sell. They really need to package it in such a way that it somehow kind of bridges that gap in terms of fairness, and it addresses the issue in a broader sense, both addressing the I guess grievances of people who kind of got on board with the Wall Street bets, as well as obviously protecting the financial market, which probably is extremely important from kind of diversions like this.
You touched on some pretty hectic brand sentiment and that big guy, little guy kind of narrative. We've been zooming in just on GameStop, but how do you think the ideas of sentiment towards organizations, how do you think that reputation towards financial institutions is sitting at the moment, Andrew? Like, is that something that is becoming more and more important?
Yeah, I mean, we have to disaggregate here temporarily because it probably wouldn't be fair to use a broad term like finance, right? So when you look at kind of more consumer focused finance like banks and stuff, they're quite good and quite proactive in their communication and work really well to maintain their brand reputation, to maintain links to their customers, to some extent. I mean, obviously there needs to be more financial literacy, as Brett talked about, and there's definitely improvements there, but it's a kind of a different ballpark. What we're looking here though is hedge funds and investment banks, and I think that is an industry that for a very, very long time not only had a terrible reputation, but didn't really see the need to ever actually ameliorate that. I mean, it's so deeply ingrained in our culture. If you think about what are the movies that represent investment banks and hedge funds in our perception, you've got The Big Short, you've got Wall Street, Greed is Good, The Wolf of Wall Street, Margin Call maybe, American Psycho. I mean, these are the representations that we have investment banks, and no one's crying out saying that these are unfair. In fact, if anything, I mean, it's become quite ingrained. And if you look at, it's hard to assess public opinion in Australia, again, disaggregating from commercial banks and insurers and your financial advisor from that high-end thing. But in the US, you can see it quite clearly because they have this focal point, Wall Street. Let's talk about Wall Street. And so you can look at the polling there, and I mean, you've got a level of consensus of distrust that is just really hard to find. You'll be able to find more people who are convinced that Wall Street will actively trick you and cheat you if they can get away with it. Then you have people who have never had a doubt about the fact that the world is spherical. Like, you would get more patience for going out onto social media and saying, let's talk about flat earth theory, than going out to social media and saying, Wall Street, I think they get a bad rap. And I think that they act fairly, and I think that they care about, the average day person. You would actually have more chance of finding people who agree with you and who would be willing to have a meaningful conversation in that space. So it's an incredibly fraught relationship. And I don't think, we talk about the GFC, it obviously got worse. There's definitely some issues there, but you look at the cultural representations, it's never been an industry that's seems to have actively worried about its relationship with the everyday consumer. And why would they, when you're talking at that end, at hedge fund and investment bank end, when you're talking about someone who doesn't deal day to day necessarily with the everyday consumer? But if GameStop has shown anything, is that potentially they have to, and it'll be an uphill battle. But I don't think we can just merely ignore anymore the reputation that from a financial aspect that relationship, the poor reputation they have with the average day consumer. I don't think it can be ignored anymore. Not only because the narrative might be more intense following GameStop, but also because they've shown that they will find ways to try to hurt you financially, and they will sometimes succeed.
I want to keep talking about that idea of communication with the everyday consumer. And Gus and Brett, I want to throw to you. So in this space where perception, reputation, suspicion, but also where finance is seen to be intimidating or off-putting, How does that influence your communication strategies? How does that influence the way that you talk to your consumers? How does that influence the way that you talk to people who could be part of the Flux family or join Sharesies? So Gus, I'll throw to you first with your thoughts around communication strategies in this area.
First, I'll just say, like, another example there is Billions, Andrew. I've just ripped through that series if you're interested.
Haven't seen that one, so I can't comment. But also, just quickly, there is one good example. I was able to, I dug around. Pursuit of Happiness has a slightly kind of, you know what I mean? It's not a bad representation of Wall Street, but that was pretty much the only one I could really find.
Maybe you're assigning some homework for our viewers today. If you're getting them to do their own media research piece and watch everything that you've shared today. What was that you were going to say, Gus, other than watch Billions?
Yeah.
So something where, as a company, Sharesies is a B Corp, so the big part for us is balancing between profit and purpose. So it's been something we've concentrated on since day one, was really making an inclusive environment and making us relevant to our investors. And for example, with the pink, we're looking to be slightly different, disruptive and fun. And so inclusive and relatable to all our investors. And a big focus for us at the moment, for example, is having an investor base which is representative of the populations we serve. So the inclusivity is really important with our communications. And the other one was something one of the approaches we took when the GameStop was taking place, was to be able to show our investors that they're real people, that we're real people. So we've got 3 CEOs. Our 3 CEOs present live with question and answers to our customers, and so that people side was able to us. Well, we're real people, and it disconnected it from us being the bad guys. So I think those are two things: continuously closing on inclusivity and having real people behind the way we communicate to customers, and that did help. Yeah.
What about you, Brett? And we've got real people hosting the daily podcast. What else? What sits behind that strategy for you?
Yeah, look, there's no doubt finance is a topic that many people find intimidating. And we find that how we communicate what we do is extremely important. And part of the reason why we've experienced some success so far, we think there are a few components as to how to do that. One is being extremely authentic or over-indexing on authenticity. It's a really amazing way to stand out. And it just so happens that a lot of large organizations just can't or won't do that. Secondly, it's really important to be relatable in everything that you do, whether it's helping your users or your customers improve their knowledge or their habits around money. You've got to make the content or the user experience as relatable and joyful as possible. And lastly, in my opinion anyway, it's got to be really snappy. Attention spans are well and truly on the way down, or at least for younger generations. And if you can pack in the right amount of information in a short period of time when communicating, then it'll likely be more effective. And yeah, I mean, those are some of the things that we focused on. But largely, it's about interacting and entertaining and educating through relatable content that people are using 24/7 anyway. That's why we focus on an app and a podcast and social media, even things like Instagram and TikTok, where we care a lot about, because that is the sort of language that people need to be hearing this sort of education in. It's that sort of style that's going to be effective today. If we were going to write long form blogs for people who spend most of their days on TikTok, it's just not going to work. So that's kind of front of our mind when it comes to how we communicate and what we do.
I think that's fascinating, and I was checking out your website, and what you've talked about being authentic absolutely stacks up there. I think there's a line on your website about Flux not being boomers in suits. So you're on TikTok, you're not boomers in suits. But I wanted to get some more of your thoughts around young people. You've been talking about the very deliberate and strategic ways that you engage with young people using different mediums. Where do you think that young people, where do you think Gen Z is at when it comes to finance? Is that a relationship that is changing?
I think it is. So Look, I think historically, personal finance was something that was considered very private. You didn't really tell someone about how much debt you had, or maybe where you invest your money, or mistakes you've made from a budgeting and saving perspective. But in the last couple of years, we've noticed that the conversation around money has really changed. It's become a lot more public. Young people are very comfortable having conversations about themselves and their financial situation through online communities. And this has been evidenced in the past with hashtags that have trended more than any finance hashtags before, things like debt-free community and things like that. And obviously, some people would be familiar with the FIRE movement. It's really starting to accelerate, and it's really exciting. I think when it comes to Gen Z and younger generations, I think that in the future, finance communities will really rotate around or hover around what we internally call credible personalities, is essentially organizations that can blend being both credible, think like a university or a big bank, but they also have to embody personality or be relatable or embody pop culture and be friendly. It's a really hard thing to bring together, and most organizations can't be both. So if you can achieve both of those, and there are organizations in Australia and around the world that are very close to that and doing extremely well because of that, but maintaining that is a very difficult thing. And if you can achieve that, then blend that with a product that excites a lot of people, then that's really a model for significant success.
That's really interesting. And what I'm thinking about, we've got people joining the call today who are primarily working as professional communicators, and some of them might be working in this sector, but they might not necessarily be working somewhere that has a TikTok or that has a pink website. What advice might you give, Brett, to those people to bring more of the personality or the authenticity to their organizations? I'll ask you first, and then I'll throw to you, Gus.
Look, it's a great one. I think that we're reaching a point where if you want to be a brand that has a genuine two-way relationship with your audience or your customers or community, being willing to show a bit more of yourself is going to become really important. I think, at least, for the generation I'm part of and the kind of younger consumers that we focus on, if you overextend yourself or over-index on showing a little bit more rather than a little bit less, generally it's well received, particularly when it comes to Gen Z. The generation is really into scrappiness and authenticity and showing yourself and not looking perfect. And I think brands who work that out can do a really good job. And in finance, it's extremely rare. That's why there's so much opportunity for Flux and Sharesies and others who are willing to go and be that brand. And so I think the real creative juice is where you can identify how can we be authentic and relatable for our target market in a way that won't hurt. It will only improve, or only can improve, likely, our reputation. But there is risk in this, so it's not an easy thing to do.
I love your piece on both communities and authenticity. One of the things we have, firstly, our platform, fintech platform, really was catered for everyone, but we definitely over-index. We've got a disproportionate amount of our customers are below the age of 40, so really tech heavy. And so we're really thinking a lot about how we can appeal and continue to keep this group engaged. What we do have is a Facebook community, so about 40,000, 50,000 people through there. So the interesting thing that we're balancing at the moment is this educational value of everyone being able to collaborate together, balancing that with our regulatory requirements as a company, which is offering, facilitating financial advice. So we're day to day is trying to balance those two things, but we see that educational value so strong, being in a community, be able to share your portfolio, be able to talk about real events, and that's that democratization of the information sharing, which is really interesting and something we're encouraging. Another example, and actually happened from a third party in New Zealand, something that's slightly different about the way that Sharesies hold their funds, their customer shares, if you like, on behalf of the customers through a custodian. It's quite a complex term, but there was a TikTok on it, there was an Instagram post the other day explaining this really complex messaging in a way through four Instagram pics. And like you say, that could be done a long blog, and historically that would have kind of made sense, but now we're just dealing with a completely different bunch of people. So I thought that was a really cool example of something really, really dry, but explained in a way that is relatable and authentic for customers. So
yeah, that sounds awesome.
Oh,
So please go ahead.
One other thing that we're finding is really valuable to our customers is once a week we do a 45-minute podcast, and we bring along a CEO from a company around in New Zealand at the moment, and the ability for our customers to live Q&A with a CEO is massive, and that's a way we've been able to break down that barrier for our investors who might own none of the company or $2 of the company, but now they can ask questions of the guys at the top, and that's really empowering for them to be able to see eye to eye and relate in a way and see that these are normal people.
Really touching on that idea that you brought up before of real people, like these are people and you're part of that team. Andrew, before we go to audience questions, so for anyone who's tuning in, if you've got something to ask, I'm going to move to your questions in a minute, so please pop those in the questions or the chat area. But first I wanted to ask you, Andrew, we have been talking about TikTok, we have been talking about Facebook groups, we've been talking about Instagram. As somebody who does a lot of research in the social media space, what are your thoughts on the future of social media and the role that it will play for disrupting finance? For anybody listening, should they be jumping headfirst into every single social media platform to get some authentic content out there? What would you recommend?
Well, yeah, from a communications perspective, obviously I'll leave the finance to Gus and Brett, but from a communications perspective, I like everything that you're saying, and it's a lot of what we talk to our clients about in terms of authenticity is first. There's a lot of talk, and I've been on panels talking about it or talking in client meetings. There's a lot of talk about the value that we get for being involved with, climate change issues, or seeming to have, good gender equality, or, empowering minorities, or whatever the objective is. There's a lot of talk about the value of it is how hot the topic is, how much people care about it. How important it is to get on social, but all of the talk there is almost as if there's just value there and there's no risks, and I think Brett just mentioned that before in terms of some of the risks in terms of reaching out to your consumers and talking proactively to your consumers about the issues. And the fact is there are huge risks if you go out there and just start communicating for the sake of communicating and talking and telling everyone what they want to hear. That, this just isn't just an opinion. Studies have shown that makes you more of a target for boycott. The more money you spend on CSR, the more you push a message of gender equality or whatever it is, the more likely you are to be boycotted. The more likely you're even to be punished in court if you have a settlement in this area. And you look at something like State Street Capital, like how long was that statue up there? Of the brave girl in Wall Street before they found out that State Street Capital doesn't equally pay their female employees. It makes you a target. People love nothing more than a hypocrite. And so we're always talking, it makes good news. It makes a great story. Everybody loves a hypocrite. It's not the same if we laugh, but it's not the same saying, big bad company that everybody knew was crap, did something crap again today, as much as company who went out there and said, look at all these things they said about gender diversity. Meanwhile, this is what they're doing among their staff. And it makes for good news and makes for good targets for activism, because activists aren't just trying to get justice, they're trying to get an issue out there. And the best way to get it out there is to make a really great narrative, and hypocrisy makes for an excellent narrative. And so we regularly warn our comms professionals that if you're going to get involved, think very carefully about what the organization that you're involved in is. What can you control and what can't you control? Do you have your kind of ducks in a row before you go into this space? Do you have buy-in across the company? If you're going for gender diversity, then you need your managers all the way. You can't just communicate it. You need your managers all the way through to buy into it and make sure that across the company you're following through with that, because otherwise you're probably just costing yourself money. You're probably hurting yourself more than you're helping yourself getting involved. And so I love what you're saying about authenticity. And I would say the same thing about social media. There's so much talk about the focus on social media and how you communicate in social media. And it is really, really important. But again, you have to have a real purpose when you go in there. Are you targeting a specific demographic? Is it for you to be able to share a specific type of content? If you're looking at it as a replacement for more traditional forms of communication, if you're an organization that still is newsworthy, you shouldn't get rid of that just for the sake of jumping on social media, just because social media is the new thing. A lot of people talk about, for example, that social media is the main place people get news. But the news that they're consuming often still is produced by traditional media outlets. So you can't give up those relationships with journalists if you are a major commercial organization. And you have to avoid also, if you're coming into a new platform, make sure you're ready to be authentic, make sure you know you have a plan for how you plan to communicate, because so often there can be massive missteps. They don't understand the culture, they make a fool of themselves. It looks like Steve Buscemi showing up to school, hey kids, and that can hurt your brand. It can actively hurt your brand. And so, strategy decisions like that have to be made with intent, a clear plan. There's no risk communication strategy. And it's the same thing for social media, same thing with CSR. And it's good to see that Brett and Gus seem to be very much organized in that department.
Thank you for your thoughts. I'm keeping an eye on the questions because we're nearing the part of the session where we will answer any questions that you have. If you wanted some advice from Brett or Gus or Andrew, if there was a topic we haven't touched on today that you hope we would. And we've got a question that's come through from Jerry. And Jerry said really interesting discussion. So thank you, Jerry. I hope that everyone's been enjoying the session today. But Jerry's curious about the level of impact that disruption is having. So is the activity that is happening for organizations like Flux and Sharesies, are they changing the world? Are they changing how finance is done around the world? What kind of impact are we looking at? Gus, what do you reckon? Do you wake up every day and think I'm changing the way we're doing finance around the world, or is it just the tip of the iceberg?
I genuinely do, and I think that's why I like coming to work each day. So we've got 1 in 15 New Zealanders are using our app now and thinking about investing and growing their wealth, and that wasn't happening 3 or 4 years ago. I couldn't talk to any of my friends about a company or a share for that matter. So I think there is a massive change there because of that access piece. I think from the financial systems piece, I think we can see examples about the capital requirements from the GameStop, where the T+2 settlement really tested the existing infrastructure. But I think every day of the week here at the NZX, we do about 20% of the trades by number of trades, and that's all coming from, that liquidity is all coming from small investors now. Well, not small, medium and large, but we've really opened up a way where people can throw their capital behind the things they believe in. I think that's really powerful. And a lot of the companies, every day I'm meeting with companies now because they see the value of their shareholders also being their customers. And there's that whole license to operate piece that I think, our app and other fintech apps has really opened up. So the power of the people really flows back through, which is really exciting, I think. Did that answer the question?
Yeah, I reckon. What do you think, Brett? What level of impact are we seeing?
Look, I think the level of impact is significant. How lasting is it? Is really, I don't know. Like, is this a phase? Is it a craze? It's definitely high impact right now. But will things smooth out and then get back to normal, or to what extent will they get back to normal? It's really hard to know. I think the way that consumers perceive finance and the investment world is evolving very quickly. I would definitely echo some of the things that Gus has said. People are thinking about investing for the first time. A huge cohort of young people are thinking about this stuff for the first time. And they've never really considered it before. And if we have an entire generation of people who get into the market, some have wins, some have losses, but ultimately they're learning and become more literate from an early age, then that has knock-on effects that generally are pretty positive. if you can learn earlier in life, it can set you on a path more likely towards what I would call hopefully prosperity or wealth, as opposed to, I don't know, debt accumulation, low levels of savings, etc. So the earlier that people can engage, and you know, I think fintechs and financial institutions are doing a great job of enabling that, and the sooner it happens, generally speaking, the better, and that'll lead to really lasting positive change.
Awesome. Gus, something I'm interested in hearing from you about is the next step for Sharesies. So you've just shared some really impressive figures about the saturation that you're reaching in New Zealand. What does the next step look like heading into Australia? What do you see as being the difference in those markets?
A great question. I don't think we've saturated New Zealand yet. I think we're still taking on 1,000 customers a day. So there's heaps more growth we're excited about here. But we see Australia as a far larger market. Obviously, in Australia, there is far more platforms. We've got 1 or 2 platforms here in New Zealand, several different platforms in Australia. So we're conscious that there are similar offerings, if you like, and there are lots more people that have investing platforms. However, our target market, if you like, is often new investors and empowering new people to be investors through confidence and access. And we still think that there's a big space for us. We're trying to figure out proper product market fit and how exactly we're going to do that. But a key comparative advantage that we'll have at the moment is the fact that we'll have 1 cent fractional investing for ASX, NZX, and the US stocks, and that's something that we don't see from any other provider at the price point that we are. And something that the fractional trading enables, it means that people can do auto investing. And so they can put in $5 and buy $5 of a piece of 1,000 companies every week. And that's something that we talk to with our new investors. It's a little and often time in the market, ride the ups and downs, and that's how they will be able to grow their wealth, like Brett says, in the long term. So yeah.
Awesome. That's looking ahead. Before we wrap up, I wanted to look back a little bit. Brett, you started working in, like, you launched the start of 2020, right? What was that like? Did you have to do the pivot? How did COVID influence what you were working on, or did you find that these conversations around financial literacy were only more important? How was that for you?
I'd already quit our corporate job, so it was too late when COVID came around. We had to do but look, I mean, as it turned out, really, we received a lot of interest, a lot of demand for the offering that we had because COVID was going on. Young people were definitely more engaged with their personal finances, I think, than they would have been, say, in 2019. It was just a crazy year, and you know, we've got this focus on personal finance. We also have this focus on business concepts, and people were really interested in what was going on in the business world last year. It was like a headline grabbing year. It was really interesting, and you know, you could say that about every year, but obviously last year was a very unique one. So it really gave us a huge jolt last year and COVID, and more people spending time at home, more time to consume the content, the video and audio content that we produce. We have a weekly game that incentivizes people to save $25 a week, and if you do that, it's kind of like you're in a lottery where you can win $250,000. We had a whole lot of people playing that game, basically feeling like I'm in a free lottery just for saving money I would have saved anyway. So it was just that the fact that people had more time available to be entertained, and that's what we focused on, happened to be a really great accelerator for us. And considering we launched it one of the worst times you could imagine to launch a new business.
It sounds hectic, but really interesting about people having more time and having more awareness. So I've got my eye on the clock. We've got a couple of people who've said they don't have a question, but they've really enjoyed the discussion today. So I want to close out by asking you guys, for people who are interested in this topic, is there a trend that they should go away and research? What might the future of further disruption look like? I can see Gus has got his thinking face on, so I might throw over to you for that one, Brett. What should people keep an eye on?
I think I touched on it a little earlier, but I feel very strongly about it. I think we're going to continue to see an intersection between finance and technology on the one hand, and then online communities on the other. It's hard to know exactly how that's going to look from a business or product perspective, but I think we can expect a lot of companies to come out and say, hey, why don't you join your friends, compete against your friends in a healthy way, or help us make this product better based on the social experiences that you're used to in the real world or in social media, so that we can all improve our knowledge around money or our habits around money. I think that the trend has already started very recently, but it's growing very quickly. And I think it really taps into something that human beings really want. It's social, and also it's beneficial on a wider perspective. So I know some companies are starting to do it. We're certainly seriously thinking about ways in which we can do that in a way that's native and authentic to us. And I think we'll continue to see that in a big way.
Awesome. Andrew, does that match with what you're seeing communication trend wise? Seeing more gamification, social, online communities?
Yeah, I mean, from a finance perspective, it's becoming a lot more prevalent. So many of the conversations we analyze for banks are increasingly about things like crypto, things like alternative investments. It takes up a larger portion of the conversation than we used to have. And going forward, aside from the obvious, keeping an eye on these trends for individual banks. Going forward, this greater involvement that is being spurred by all that, I think it's more important for a lot of these this finance industry, both like commercial banks as well as high-end finance, to think about when we do reporting for them, it so often is about their individual brands and their competitor brands, to think about how that industry is viewed in general, to make sure that their communications are kind of streamlining with wider views, because you can become really siloed in terms of these are my communications efforts and these are how people are responding to them. And when you look at something like GameStop, that was an opportunistic attack. It wasn't purely about Melbourne Capital. It was about people's perceptions of an industry that made people react that way. And so, looking forward for comms professionals, I think that's probably something that we don't see enough of with our clients working in industries like banking, for example.
Awesome. Last couple of minutes, over to you, Gus. Trends to watch out for, whether it's finance, communications, or the intersection of the two.
For me, it's the community space, and I think it touches on what Brett and Andrew both talked about. We're seeing the strength in our communities around the investing, and a key piece of that is validation from your community, and people love to know that they have been validated by the community and they're putting their money behind, or their decisions are supporting their personal beliefs and their goals as individuals. And so we're doing a lot of exploring to see how we can support that, and then how that we can get the information out there so the communities can understand that piece. So it's that's where we are, the communities as well.
Sounds awesome, and it sounds like that's a real key to understanding and community building. That's all that we've got time for, I think. We barely even touched so many of the topics that we could have gotten into today. We didn't touch the sides of crypto or hedge funds. We might have to do this again, but thank you to everybody who's joined us. It's been a really fascinating conversation. Thanks for giving us an hour of your time. And thank you to our panelists. Thank you, Andrew. Thank you, Brett. And thank you, Gus, for joining us today. Have an awesome afternoon, everybody. See you later.
Yeah.
Thank you.
See you.